Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So on the gold market currently stands really interesting struggle between the bulls and bears, and it seems that it lasts till the end of the year. On weekend we talked a lot about the importance of the 1890 level for a longer term technical scenario, because in 1890 is the break-even point for monthly pattern. And for bulls, it is preferred to get the close above this level. In this case, we will get monthly bullish grabber, and this brings absolutely different perspectives from the technical point of view for the bulls. Of course, any pattern could fail, but at least existence of these patterns already provides some context, and we could plan the technical scenarios differently based on this pattern, compares to what we have to do if we would not have the pattern. So it's absolutely different approach for a technical background. So that's why it seems that overall contradiction between bulls and bears will last with the recent two sessions till the end of the year. And here it's very interesting situation on the intraday charts. On the daily chart, as you can see, a market mostly stands inside the wick, inside the same high wave pattern that indicates the indecision, and even improvement of the 2008 bill yesterday wasn't able to push gold out of the consolidation, although it has led to significant upward reaction first, but later this reaction has been erased and market returned back to the same levels as it stands before. At the same time, here we need to pay attention to a few moments. So on the daily chart, at first glance, this sell-off looks a bit bearish. It reminds the shooting star pattern and mostly reminds the reversal session, although closed was not below the previous lows, but in general market has moved significantly higher and then closed below the near the bottom. So that's overall price shape here looks bearish. But at the same time, take a look what we have around this consolidation, how it looks like. So on the 4-time frame chart, you could see that it takes the clear shape of the pennant. Take the shape of the triangle, that potentially is bullish continuation pattern. And in general, if you consider this pennant, this consolidation together with the ABCD price action, you could see what really we have. COP target has been hit, retracement, and market turns to sideways consolidation. This is not type of action for reversal. This is type of action for upward continuation. So usually, as I said many times already, this market is, when it's reversed down, indeed, it shows stronger and more straight action, something of that sort. That's type of the reversal when this has happened. As you can see, market shows minor pullback and then continuation. Here we do not see it, even with the strong sell-off that it's supposedly promised deeper and stronger action that hasn't happened. Market turns to sideways flat action, forming the pennant, and that is potentially the bullish price behavior. So that's what we have here. And on the 4-hour time frame chart and the hourly chart, we have two possible scenarios that we need to keep in mind. First of all, for this very short-term stop, we have to set invalidation point. Invalidation point here will be 1860 approximately, 1858 maybe, these lows. So it's preferable that market will hold above this area. Of course, it's more preferable that market stay inside of the pennant. Would be even better. But if this will not happen, so at least market should stay above these lows, and that's, we think, it's a vital point for this short-term bullish context that stands in relation to this consolidation. Because potentially, if even market will out of the pennant, it still keep chance for the possible butterfly here to the upside. And from that standpoint, these lows seems more important than the border of the pennant. But if market stay inside the pennant, that will be much better. So one of the scenarios that we could consider is a bullish catalyst triple to buy pattern that could be formed here. So you can see this upward action, This is improvement of the 2008 peg, and then consider price action that we see. Potentially, market could show minor continuation completing of this ABCD pattern that could give us the catalyst triple to buy. So if you would like to buy gold, that's the pattern you could consider. That will be your invalidation point for this trading setup. Alternative scenario you could see on the hourly chart. This is how situation could turn as well. To understand this, you need to recall what we discussed on the previous week. Recall what we said. The bearish context will be valid until market stands below the B point and 1887 resistance, because in this case market could complete the OP and then still continue downside action if market will form the catalyst triple to sell. That has happened. Market has formed catalyst triple to sell, shown downside action, but in this type action, market shows the acceleration based on the fundamental news, and it has broken the 618 level and has broken through the OP target. So that action was stronger and faster and above the target that we have specified. And at the same time, here we also have the bit minor pennant. If you remember, we also discussed this as potential bearish pennant. That pennant has been broken. Now market retests this border here and stands above it. So alternative scenario suggests that if market will be able to hold above this trend line, upward action could start right from here. And next target, nearest target will be 1907. This is XOP of the same minor ABCD pattern. And take a look, here could be the butterfly 127 extension. Next will be 1618 is 1990, and that stands closer to the target that we have on the 4-hour time frame chart, which is the OP on the same ABCD pattern 1929. So these two targets that we have here also could be the butterfly in this case to the upside that I have mentioned already. So something of that sort is forming on the euro currency as well, but there the upward action stands a bit better than it's on the gold market. Euro currency shows a bit more aggressive action compared to the gold. That's why on the gold it could be still two different scenarios, but well, currently we still do not think that overall price behavior is bearish. So we think that current price behavior mostly stands in favor of the upward continuation. As market stands inside the pennant, market keeps chance on the possible bullish patterns. Market stands above the invalidation point that we have mentioned, and overall price action looks different compared to the price action that should be formed if market shows the real downside reversal. So all this stuff makes us think that the gold could try to move higher in the nearest couple of sessions. So again, the price action on the euro currency also stands to the upside. The question here is mostly just by the what pattern upward action will start. The market will form here a butterfly and starts upward action immediately, or it will show first a bit deeper downside action. For example, as I said, catalyst triple to buy could be formed, and then it will try to reverse up again. So that's things to consider in the nearest few sessions. Finally, breaking up through these lows around 1858. I'll tell you that market still will go lower because the overall background for a short-term bullish context will be destroyed. So all the stuff that we have discussed is valid until market stands above this area.